Hello, good day, everyone, and thank you very much for joining this Geneva Association Risk Conversations webinar following the launch of our paper on the regulation of AI in insurance. My name is Dennis Noortu, and I will moderate today's session. At this very moment, as we discuss AI regulation in insurance, the British government is hosting a pivotal AI safety summit, convening 100 global leaders and tech executives. They're addressing the critical challenge of ensuring AI doesn't become a malicious force or threaten humanity. The Economist just a few days ago suggested that this summit could be a historic moment, marking the first time global leaders convene to navigate the transformative potential of AI. While it is important to take AI-related concerns in insurance seriously, the aforementioned summit highlights that there are more pressing issues beyond insurance. Renowned author Yuval Harari recently said, AI will be the end of human-dominated history. Whether this proves true remains uncertain, but his statement underscores the profound potential impact of AI, which goes far beyond, I think, the discussions we're having today within insurance. Global momentum for AI regulation is undeniable. The EU's AI Act is reaching a pivotal phase. The White House is about to release an AI executive order. The G7 is drafting a code of conduct for AI firms, and China has initiated its global AI governance initiative. In light of this, we thought it to be relevant to convey the insurance perspective. Today, we'll briefly walk you through the key messages of our recent paper and offer some perspective as to the regulation of AI in insurance. And following that presentation, we will turn to our fantastic panel, including a number of key contributors to the paper, and discuss how AI is used in insurance and how it helps evolve our industry, address some of the risks of AI in insurance, talk a bit about the AI regulatory landscape, and try to answer the question, or at least discuss, how to balance innovation and consumer protection. Before we dive into the key messages of the paper, there are a few housekeeping announcements. The first one is on Q&A and interaction. Towards the end of the session, we have reserved time for Q&A. Please use the Q&A function within Zoom to send us your questions. And once the webinar is over, you will receive a survey for feedback. So please help us improve and provide your feedback through the survey. So let us dive into the key messages of our recent paper. Next slide, please. AI has naturally gained the attention of policymakers who are tasked with developing legislative and regulatory frameworks that on the one hand should take care of risks and concerns around AI, but on the other hand allow their jurisdictions to become leading AI nations. Not an easy task. Given the recent surge in interest and hype about AI, we thought it to be important to offer insights from an insurance perspective. This is especially important because the current enthusiasm often lumps various types of AI together, potentially creating misconceptions. In addition, many of the policymakers dealing with AI are far away from the insurance industry and might not necessarily be fully aware of how AI is used within insurance and how insurance is regulated. In this regard, we thought it would be important to build bridges between the insurance supervisory community and the wider policymaking community, and we hope that this paper is contributing to that debate. And our paper, as I said, is aimed at policymakers and legislators beyond the insurance regulatory community, and it therefore aims to tell a story about how AI is used within insurance, how it benefits consumers and insurers, also addresses its risks and concerns, and how these concerns are addressed by the companies themselves and also by existing regulatory frameworks. The paper also elaborates on AI legislative initiatives underway in a number of key insurance markets and highlight case studies from jurisdictions that have taken an approach that balances innovation and customer protection well. Next slide, please. Now, AI has an enormous potential to transform the insurance industry. Not only will it make processes more efficient, it also has the potential to enhance accessibility, availability, and affordability of insurance. AI helps insurers to evolve the business model from just paying claims when the insured event happens to offer risk prevention and mitigation services, and thus enhancing the value proposition to societies. From an earlier survey among insurance executives, we know that the following core objectives are grounds for insurers to invest in AI in order of importance. First, to create a better customer experience. The second is to improve internal decision-making, followed by innovate products and services, increasing efficiency and productivity, cost savings, risk reduction, and lastly, growing revenue. Now, as this slide shows, AI can be applied across all stages of the insurance value chain. And let me highlight a few use cases. First of all, underwriting. AI can support the underwriting process, such as through image analysis, risk assessment, and natural language processing, which in turn could lead to improved quality and speed of risk analysis. And this is particularly helpful for more complex risks. And then in the area of customer service and policy administration, specific tools could include predictive analysis, voice recognition, and natural language processing. And these tools help to create a more tailored and efficient customer experience. And particularly helpful is that these tools allow for a continuous interaction with the customer, rather than just at the beginning when the policy is signed until the moment that there is a claim. And by providing a continuous feedback loop, it allows for the provision of risk prevention and mitigation services. Again, going back to the value proposition of insurance that could be enhanced by this. So to sum up, main benefits include more accurate risk management, pricing, a more curated customer experience, a reduction in cost, and an improved quality and speed of service, and improved claims handling, but also fraud detection. Next slide, please. But what is new about AI? And I think it is important to mention that AI helps insurers to get better at what they're already doing. It does, in that sense, not fundamentally change these core processes. Let's take underwriting as an example, a core process that involves assessing and pricing risks, a process that is based on data and has always been based on data. AI augments this process by enabling vast data processing and analytical capabilities, ultimately leading to more efficient and accurate risk assessments. Now, this paper focuses mainly on conduct risks, and conduct risks commonly associated with the use of AI include, but are not limited to, discrimination, bias, and a lack of fairness. The use of AI, and in particular its powerful ability to analyze massive amounts of data, could potentially lead to unwanted correlations and potentially to indirect discrimination. Now, coupled with a lack of transparency and explainability, there where complex algorithms are involved, it's challenging to actually explain causation and the role of each of the variables used in the outcome. And then there is a possibility of unaffordability and exclusion. Well, some cohorts of customers could benefit. There are others that might be faced with a disadvantage if they were to be paying for the true price of the underlying risk in the case of the use of AI. Now, importantly, those risks are not completely new. They have existed in a non-AI insurance world as well, but are emerging through a different channel as a result of the use of AI. There are some AI-specific aspects, such as the speed with which and the scope of the customers potentially affected at the same time. Now, the interviews that we conducted as part of the paper with insurers reveal that insurers are very well aware of those risks and are taking steps to tackle those challenges and risks, including maintaining meticulous audit trails for AI models, as well as efforts in developing methodologies to detect and prevent bias, as well as adhering to AI governance principles. We've also noticed that the human in the loop is a very important element, whereby AI supports the work of, say, underwriters or other teams within insurers, but does not necessarily completely replace that, or does not work fully autonomously in that sense. Next slide, please. Now, this paper is about regulation, and it looks at regulation in two different ways. In a first step, it is really assessing emerging AI regulation in a number of important insurance markets. And in a second step, it looks at the existing laws and regulations and assesses the extent to which the use of AI in insurance is already covered by those frameworks. As to the emerging AI regulation, I think it is clear and it's fair to say that the EU AI Act is probably among the most ambitious. This horizontal legislation will apply across sectors and industries, following a risk-based approach. Insurance is affected to the extent that a number of applications used within life and health insurance are considered high risk and potentially be subject to additional regulatory requirements. Now, other jurisdictions are taking different approaches, and some others are actually waiting and seeing how the EU AI Act is evolving and base their decision based on that. But we have seen, for example, that jurisdictions like Singapore, the UK, and the US to a certain extent, they are leveraging existing insurance regulation through the issuance of regulatory guidance and bulletins. Now, in the second step, we have assessed how existing insurance-specific and non-insurance-specific laws and regulations capture a number of the conduct risks linked to the use of AI in insurance. We've looked at a number of key markets, including the EU, the UK, the US, and China. And this overview you're seeing here on this slide is for illustrative purposes only. But what I think it shows is that existing regulation captures many of the conduct risks related to the use of AI in insurance. Regulations include insurance-specific laws and regulations, including insurance distribution regulation, as well as cross-sectoral regulation, for example, around the use of data, automated decision-making. Now, importantly, most of those laws and regulations are not specific to AI, with the exception of certain statutes that we are seeing in China, but are technology neutral in nature and can just easily be applied to the use of AI or any technology in insurance. And if needed, regulatory guidance can sort of help supervisors in their implementation of that and interpretation of the existing regulation. Next slide, please. Now, I think one of the big questions is really around, how regulators and supervisors or the policymaking community that is tasked with taming the AI beast, so to speak, should balance innovation and consumer protection. Now, our paper found that the following should be considered. I think the first is really it is important that regulatory approaches focus on outcomes rather than having a too heavy focus on the inner mechanics of artificial intelligence. Now, policymakers and regulators need to be mindful of how they define AI for regulatory purposes, and they need to ensure that the definition is limited to self-learning applications, such as machine learning, to prevent an over-regulation of already established practices. And I think the OECD definition is particularly helpful in this regard, and I think it is good to see that this is also being adopted more and more by certain jurisdictions. The other element is that AI is already, or insurance is already quite heavily regulated. And it is important that existing laws and regulations that are often designed in a technology neutral manner are leveraged and guidance issued on how to use these frameworks to address the risks emanating from new technologies, such as AI. And I think this approach is, and we will hear from our speakers on the panel in a minute, but this approach is followed by a number of jurisdictions. Now, a principles-based regulatory approach will help to stay flexible and agile. And this is particularly relevant as AI is a moving target, given its rapid evolution and the rapid, evolving technology and emerging use cases. Such an approach provides a framework that can adapt to changing circumstances, manage AI risks while still allowing for innovation. Additionally, I think, and that's really putting the use of AI in insurance into context. There are unique characteristics to insurance compared to the use of AI applications in other sectors and industries. And I think this includes the reversibility of decisions, which is quite different compared to sectors where AI decisions might be irreversible and have severe consequences. And an important way to ensure consumer protection here are the redress mechanisms and the human in the loop. And I think linked to the previous point of approaches with regard to data governance and frameworks, properly designed data governance frameworks with a focus on outcomes rather than individual data points allows to leverage the benefits of AI while protecting the consumer. And lastly, and we will talk about this a bit in our panel discussion as well, international cooperation and coordination is quite important in this regard. Next slide, please. So that brings me to the end of the presentation of the key messages of the paper. And I would highly recommend you to download the paper and look at the 4-page summary that we've also made available for you on our website. And let's now turn into our fantastic panel to really talk about some of those issues that the paper addresses, and see if there are any new perspectives that are arising. So let me first introduce my panel to you. So starting with Julian. Julian is a senior expert on financial innovation at the European Insurance and Occupational Pensions Authority, or EIOPA in short. He focuses on the impact of emerging technologies like AI and blockchain on the European insurance sector. Next is Commissioner Burain. Commissioner Burain is the Maryland Insurance Commissioner. Previously, she worked as a partner at DLA Piper, focusing on insurance and regulatory compliance. She serves on the executive committee of the NAIC and leads its Innovation, Cybersecurity, and Technology Committee. Welcome, Commissioner. Then we have Christopher. Christopher is the Director of Legal Affairs and Operations at Intact Financial Corporation, where he leads the legal team in areas like procurement and IT. He's been instrumental in responsible AI and ML initiatives, including Intact generative AI guardrails. And lastly, we are turning to Mike. Mike heads a division overseeing life and non-life insurance companies at the Monetary Authority of Singapore. He is involved in policy development in areas like insurtech and corporate governance. And Mike is a member of the International Association of Insurance Supervisors FinTech Forum. So a warm welcome to all of you. Thank you for being here. Now let's just turn into our first set of questions. So our recent paper that I just presented aims to tell a story, starting by explaining how AI is used by the insurance industry, its benefits, and how it can enhance the value proposition of insurers to identifying and addressing AI risks and concern. What is being done to mitigate those concerns, to addressing emerging as well as existing regulation, and the extent to which they account for the concerns? It aims to take some of the hype and mystery out of AI. So let us start the story at the beginning by looking at how AI is used and what it can do for our industry and customers. So Julian, I'm starting with you. Could you maybe in 2 minutes tell us more about the benefits of AI applications as used in insurance?
Yes, thank you, Dennis, and also thank you to the Geneva Association for organizing this event, which I think it's very relevant and timely in view of all the developments that are taking place regarding artificial intelligence. When it comes to the benefits of AI, they are all well documented, included in the paper that the Geneva Association has published, and other organizations as well. I think it's important to highlight that there are benefits both for insurance companies as well as for consumers of insurance products. I think this is important to highlight when talking about the benefits. There's many benefits, and they probably differ from use case to use case, but I will highlight 3 common characteristics, and it's the increased automation of processes, the possibility to develop new products and services, and the operational efficiencies, cost reductions that most of the use cases entail. For example, when an insurance company uses AI to process claims submitted by the customer, they can use artificial intelligence algorithms to process the information provided by the consumer, more timely and in a more efficient way, analyze the information submitted and calculate the payment. This is an example that clearly has benefits both for the insurance company and as well for the consumer, which will be satisfied when their claims is satisfied in a speedy way. Other examples, you refer to the use of underwriting and pricing, or certainly the use of more data in this big data context that we live on, and artificial intelligence algorithms. They enable for more accurate and granular risk assessments. And maybe also just to to highlight another benefit that is important from a consumer protection perspective is the convenience. The convenience of, for example, when it comes to the use of chatbots, they allow consumers to be able to interact and to receive feedback on a 24-hour basis and from any location, and this is certainly very beneficial, very convenient for consumers. And I could continue giving many more talking about benefits of artificial intelligence, but I think I will stop there.
Thank you, Julian, and this is very helpful. So you mentioned sort of the increased automation, the ability to launch new products, increased efficiency, accuracy, and convenience. Commissioner Burain, so following up on the input and answer given by Julian, how in your view has the use of AI helped the insurance industry to enhance their value proposition to society and to consumers?
Well, good morning, and also let me thank you for the opportunity to be with you this morning and to talk about this really critical topic. I think I would echo, Dennis, what you sort of said in the preview, and then of course what Julian has said. So if I step back and think about, broadly how insurers use AI techniques, they use it to better understand the environments in which they operate, to draw conclusions, identify trends about markets, consumer and customer needs and risk. They use it to predict behavior and events. They use it to facilitate interactions, including, of course, interactions with policyholders and potential customers. And then if you translate that into how that has helped the industry, as we discussed, it's a way to understand customer need better and therefore design better products that are able to meet those needs. That's a tremendous importance when we talk about inclusivity and what it is that people really want to buy, and making inroads into communities for whom traditional products may not have a value proposition. Understanding and predicting risk more accurately and more nimbly, that's what allows companies to take on risks that have been hard to write because of volatility. It allows companies to remain in markets and to continue to offer risk protection in what have been increasingly difficult circumstances, and of course to price risks more accurately. It eases sale and interface, whether from policy management through claims administration, and it allows for a broader and frankly more creative distribution mechanisms and platforms, which also improve inclusivity. So all of those things, the way insurers are utilizing AI at a high level, how that begins to apply in their concrete interactions with customers, is a tremendous benefit to those customers and to, frankly, our society as a whole, as it really opens up vistas for additional risk financing, and particularly in communities that maybe have been resistant or haven't found value before.
Thank you very much, Commissioner. I think this is really helpful. I very much like the points on the sort of that it allows us to understand the customers better. And when we understand their needs, it helps us to sort of enhance inclusivity and provide them with the products they need. And I think the other point that sort of resonates well with I think work that we are doing is the fact that we have a better view on the risks, and that this allows us to actually take on risk. So Chris, we're turning to you. And let us put this all a bit into perspective, because we're talking about what AI can do. And as we know, the insurance industry is one of the oldest data-driven industries. But how do you see AI-based underwriting, to stick with these examples, being different from classical underwriting without AI? And really to understand sort of the points made by the other speakers better, what is really different in an AI context in that sense?
Thank you, Dennis, and Geneva Association for allowing Intact to share its thoughts on this. I think, much of the job remains the same. And I think that's really important to bear in mind. That, it's all about assessment of relative risk. What AI-enabled technologies allow us to do is to assess risks that would be previously difficult or impossible to assess, and then to price them accordingly. As Commissioner Burain said, there are some things that you can measure at you can measure now that would allow people to either be able to avail themselves of insurance, or potentially, pass a higher price to the higher risks. A good example in personal lines is auto, where there's been usage-based insurance. UBI is a good example of an AI-backed system that measures driving behaviors, predicts expected rate of accidents. It's got greater precision with AI than it would be without. And there's real customer benefit for that. You could, for example, see that higher risk drivers are priced accordingly, and then you end up extending discounts to the good drivers, which frankly are in the majority. So it has, a general overall societal benefit there to increase accessibility to coverage. And then what happens is once you have that sort of AI layer on it, you can create some features that maybe don't feel like insurance features, but are really beneficial for customers. So a good example is crash detection. When someone is using usage-based insurance and their vehicle is involved in an accident, our app will offer them assistance as a result of the crash. That's a value added thing that isn't possible without an AI technology on the back end. Other good examples, there's lots of examples. I'm sure, we've already covered a lot of them, but it's really about improving underwriting accuracy and speed. Also in non-consumer lines, if you think about it in terms of fire and flood risk, we have traditional fire and flood models, but they can be deeply enhanced by pairing them off with something like a predictive AI weather model, which will then, we can use various sources to help with that analysis. And really, instead of taking something that's very broad and coarse, you can get something that's fairly narrow and precise. And it's really that direct identification of risks that allows us to really support our customers by giving them the most accurate pricing. I mean, sometimes it's not always the price they want to get, but it's accurate based on risk. And I think overall, that's the big difference that AI enables for us.
Thank you, Christopher. I think these are really helpful points and really insightful. Let us now turn to Mike. So really building on what we heard before from the other speakers, where do you see the biggest impacts or benefits of AI across the insurance value chain?
Thanks, Dennis, and thanks to the Geneva Association for this opportunity to share our thoughts. I think my fellow panelists has already brought up quite a lot of examples of the benefits of AI. Maybe I'll just add one more, which is that I think AI really allows us to uncover new insights. I think in our conversations with the insurers, many times they will use both supervised and unsupervised models. And a lot of times they also share with us that the unsupervised models was able to uncover a lot of insights, which they have never thought of before. I guess it's just a matter of the machines being able to digest and assess a lot more data than any human can. I think that is something that before the age of AI, there are a lot of insights that we have not uncovered before. Thank you.
Thank you, Mike, and thank you all for your insightful answers to the questions. Let us now turn to something I think that is on people's minds. It's really the risks of AI in insurance. Now, a recent paper looks at the core risks and concerns around the use of AI in insurance and how these risks are being addressed. Core risks revolve around the lack of transparency and explainability, discrimination, bias, and a lack of fairness. We also, and I think it was just touched upon, the issue of unaffordability and exclusion to certain customers, and of course the whole issue around the use of data. Now, many of these risks are not completely new to insurance or to the insurance industry, and existing regulation is somehow already addressing a number of those issues. So, Mike, Julie, and Commissioner Brain, you are representatives of the regulatory and supervisory community, and you're all actively involved in the regulation and supervision of insurers, including their use of new technologies, such as AI. So let us use the next few minutes to zoom in on some of those core risks as identified by the report. So Commissioner Brain, I'm starting with you. So what do you see as the main I would say, conduct-related risks to the use of AI by insurers?
So I would say that for regulatory supervisors, probably the core consideration is whether decisions that are made by the industry using AI techniques, AI systems, meet the regulatory standards that apply to those decisions. Or are the decisions inaccurate? Are they arbitrary and capricious? Are they skewed in a way that adversely impacts protected classes or otherwise results in unfair and illegal discrimination? So for me, at least, the concern is always about error. Can you trust the machine? Can you trust the program? Is it accurate? Am I following my GPS off the cliff, right? Are distinctions based on invalid or illegal factors? So has bias creeped in through the data or through the algorithms, the questions that are being asked? And while I would say there's literally nothing new about those concerns, given the added complexity and the sophistication, the difficulty sometimes of access with respect to AI decisional systems, we really now need to focus on, is there the right level of governance? So what that then comes down to from those core considerations is, given all of that additional complexity, what kind of controls and processes have been put into place to mitigate and monitor? So, for example, then, is there the right level of governance, the right level of risk management and oversight, including validation and monitoring? Has there been adequate diligence around third-party data and models before they're deployed by a licensee? And then, within all of that, of course always includes concerns about privacy and concerns about data security. So, that's sort of the short version of where I think the regulatory mind goes in making sure that these particular methodologies do not disrupt or violate our core regulatory principles about regulated conduct.
Thank you, Commissioner. So if I may summarize this, I think it all comes down on sort of to error, right? Can we trust AI, and are the decisions that it is taking really in line with what we expect from it and in line of sort of the regulatory boundaries that we have set? So are we following the GPS off the cliff, so to speak? Turning to you, Mike and Julian, and going to you, Mike, first. How are these risks different in an AI context compared to the classical non-AI insurance context, where decisions are also being taken, but in a different way?
Yeah, thanks, Dennis. So firstly, I agree that the risks are not new. But what is new with AI is that because of the nature of how AI functions, when there is an error, it could lead to a more systematic issue, meaning that the impact could be more widespread, and it also can manifest in a faster way. So really, it is really because of this that the MAS also wanted to release our FIT principles. That stands for Fairness, Ethics, Accountability, and Transparency. And these principles also help the FIs to have a set of foundational principles to consider when they make use of AI in their decision making. The other objective, of course, is to have a set of principles so that the insurers can operationalize the governance of AI in a more systematic way. And lastly, and in fact could be the most important point, is that we need to promote trust and confidence in the use of AI, not just within the insurers, but especially within the consumers and the policyholders. Thank you.
Thank you, Mike. So really, what is new is sort of the way it can spread, right? And that we need to work sort of on building trust around how we're using it. Julian, same question for you from a European perspective, maybe. What do you see as different when you're looking at AI compared to non-AI insurance business?
Well, leaving aside this risk of extinction of humanity that they are discussing now in this UK conference, when it comes to specifically to an insurance context, I think that there are some nuances that that artificial intelligence brings that are slightly new. Then, as you correctly said, and the colleagues before me just said, they are not necessarily new, but they are enhanced by artificial intelligence. One of them is, from our point of view, is the increasing use of data sets, this big data that I was referring before. For example, until not so long ago, text were not considered as data. Video images were also not considered as data that were included in the decision-making processes. The increasing use of this data, also bear in mind this digital context where we live in, and this increases the risk that it's more difficult to implement adequate data governance measures that ensure that, for example, the removal of biases in the data. When it comes to the algorithms themselves, some biases can also be derived from these algorithms. For example, when it comes to neural networks or deep learning algorithms, which can find non-linear multivariate correlations between the data in a relatively difficult way to explain. This also can enhance the risk of bias in the outcomes. And one third risk that I think it's becoming more and more important in an AI context is the reliance on third parties, which was already referred by the colleagues. But in the context of generative AI, we see that there are a reduced number of big players that are the ones that are offering these foundational models to the customers, including insurance companies. And we believe, and also some consultancy firms believe, that the use of these generative AI foundation models will certainly increase in the near future. This raises some relevant risks. For example, among other things, these companies that develop the foundation models don't tell you how the data and which data was processed on. So this, from the perspective of insurance companies and the reliance on these models, raises a number of risks that need to be mitigated.
Thank you, Julian. I think that's an interesting point, the reliance on a small number of big companies that basically develop the models and train the models, but don't tell us as users how those models are being trained. Turning to you, Christopher, and really looking at this from an insurer perspective, what do you see as the main risks? And looking at your company, how is your company sort of addressing those risks while AI is being used?
Yeah, I think to echo what my fellow panelists have said so far, I think the primary risk is that we lose trust of our customers if we don't treat them in a fair and equitable manner. I think that's just by far the most important element. If we make inaccurate decisions or blindly trust a system that we don't understand and there's inaccuracies, there's a real risk that our customers will not really trust us to take care of them when they need us. And that's the core of insurance. And I think that risk emanates from all the same core risks that have been identified in the paper. But interestingly, I mean, I think the way we mitigate these risks is, and I'll take it in two steps, is AI generally, we already have in our organization formal ethical and data governance frameworks that are embedded in our system. That's multidisciplinary. Where data projects, as they come forward, are reviewed and assessed against our ethical and legal standards. This is not a new thing. I actually don't know when it started, but it started before I joined Intact, which was over 5 years ago, about 5 years ago now. So I think embedding that in, as a cultural norm from the beginning of a project, not at the end where somebody's created the thing and then says, "Hey, can I launch this?" Doing it at the beginning before they even go down the path is really critical. For Gen AI, we've started, I mean, we're all sort of early on that journey, but what we've done is gone a step further and developed a set of evolving Gen AI guardrails. And and they're separate and distinct from the ethical guardrails and data guardrails that we already, or data standards that we already have. But really what they focus on is mandatory rules for ethics, oversight, documentation, which I think is an area where people are going to fall down pretty regularly, where they're not going to actually say what they did or track from creation to production. Accountability and human validation, and I can maybe hone in on that one just to say there's always a human accountable in our models, in our systems. Even if it's automated, there's still an accountable human who is responsible if something needs to be corrected or if it goes wrong. And then we also set up rules for what we will use to train Gen AI models. Obviously, we can't directly influence some of the foundational models, but certainly what we use, there's going to be strict rules about what is and isn't allowable. And then I think we also set up resiliency requirements. Obviously, this is new, so if something goes sideways, we need to be able to take it out of production without impacting the rest of the business. That's really important, I think. And we're also pushing certain guidelines down to our third-party supplier partners, where we, it's one thing to have transparency within your organization, but I think we also have to have some transparency with our supplier population, because we can't kind of say, well, I didn't know we were doing it, and then the supplier is actually doing all the things that we said not to do. And so for that, that was developed internally, but validated by external counsel and external experts. That's really helpful because we're going to now test it against alpha and beta type projects in our organization. And then once that's been proven to be, effective, those will become structurally embedded in our governance. And I think that's how you build trust, is you have to have those structures from day one. You can't kind of have someone come to you after months of working on a project and say, oh, I'm sorry you spent, a year of your life working on that, but we can't launch it. Because then the pressures of sunk cost are going to really push against making the right decision. So we try to capture them up front.
Thank you, Christopher. And I think to your point on the multidisciplinary teams working on AI in insurance companies, this resonates well with what we found in our paper as well, when we're doing the interviews. We really see that this is not developed in isolation, but really different departments, whether it's legal, regulatory, and other teams from the business are involved right from the start. It is not just a group of coders sitting in a room and creating, fantastic tools that are then just rolled out. There's this continuous interaction. And what I really also, I think, from sort of the paper perspective want to add is that really this whole idea of the human in the loop, and really deeply understanding from an insurer perspective, how the tool works and how the mechanics work. So really understanding how sort of the outcomes are generated, because it works both ways, right? It's not just for the consumer, that the consumer is treated in a nice way and in a respectful manner. But at the same time, as an insurer, you take on risks, and if those risks are based on, a misguided algorithm, then there is a risk there as well on both sides, basically. I think that's a really interesting point, and it's good to see this in your company as well. Let us now turn to sort of our discussion on the regulatory landscape, because I see we're running a little bit short on time. Now, one of the key messages of the paper is that the existing insurance and also other to the insurance sector applicable regulation should be applied and leveraged when addressing AI-related risks in insurance, such as by issuing regulatory guidance. Now, I think I would like to zoom into this for a moment. And we already heard the FEED principles in Singapore, but I think there are other interesting developments on this panel that I would like to just highlight. So turning to you first, Mike, and you already indicated or highlighted sort of the principles you developed. So I think Singapore is renowned for its regulatory approach to new technologies, including AI. Rather than issuing new regulation, the monetary authority has developed the fairness ethics, accountability, and transparency principles. And you also set up the Veritas Consortium with participants from across the financial sector that develops sort of actionable methodologies to implement the FEED principles. The question is, what has the experience with this approach been observed far? And has the existing regulatory framework indeed proven to be sufficient and applicable to technologies such as AI without the need for for adjustments in the regulation itself?
Thanks, Dennis. Well, the experience so far has been good. Maybe I'll start off with our main objective, because when it comes to AI, MAS's goal has been to encourage and foster the adoption of responsible AI in local and global ecosystems. I shared a bit about FIT just now, so maybe I will share more about Veritas now. Veritas is basically a multi-phase collaborative project with the financial industry as well as related companies in this sector. It was launched in 2018, and by the June of this year, it has completed 3 phases. In phases 1 and 2, we focus on the FIT principles and also a methodology to implement the FIT principles. In phase 3, which is the latest phase, we have worked with consortium members on integrating the Veritas methodology with their existing risk management frameworks, and also documenting potential challenges and lessons that they have learned from these experiences. We wanted this documentation to serve as reference for future integration cycles within the organizations. However, I just wanted to add that as the technology evolves and the challenges and complexity presented by AI deepens, MAS will continuously assess whether there is a need to move beyond principles. Thank you.
Thank you, Mike. That's a very helpful insight, and I think we'll build on that when we look into sort of the other approaches. Now, Julian, turning to Europe, and I think it's interesting. EIOPA has issued several statements in the past in which it has indicated that, well, it understands the rationale behind the EU AI Act. It believes that the existing insurance supervisory and regulatory framework captures AI-related risks in insurance well, which could be interpreted as that there is no horizontal framework needed for AI-related risks in insurance. Now, time has passed, and I think a lot of developments happened within Europe on sort of workings on the EU AI Act. The question is really, what has changed since EIOPA took this position? And has EIOPA been able to sort of convince policymakers working on the AI Act that the existing regulation captures a lot of what the AI Act is trying to do, if I may say it that way?
Yeah, thank you, Dennis. Let me, before I start talking about the EU regulation, let me first praise the work from our colleague from Singapore and also from the NAIC. So I think they are 2 of the most advanced jurisdictions in this area, and they have engaged with stakeholders from an early stage and developed some guidance also on an early stage. And not all jurisdictions have done this, but I think it's important and also welcomed often when we discuss it with stakeholders. When it comes to the EU, indeed, as you mentioned, we have the AI Act, which is a legislative proposal, which is currently being negotiated by the legislators in Brussels. It follows a cross-sectoral approach, as you mentioned. So it doesn't only apply to the insurance sector, but it also applies to other sectors like the automotive sector, any other sector in the economy. It follows a risk-based approach, meaning that for certain use cases, the requirements that they establish are higher as compared to others which are considered as medium or low risk, where the requirements are lower or very limited. And specifically to insurance, indeed, so there's this annex in the legislation which addresses what they consider as a high risk, and their life and health insurance pricing and underwriting is currently considered as a high risk. It's still being discussed, so it may change one way or another, but most likely, or it's likely that these use cases, pricing and underwriting, life and health, could be considered as high risk, and therefore they will need to comply with the requirements of the AI Act. EIOPA's position in this regard is that while we welcome the AI Act, we think it's important to establish some rules with regards to the use of artificial intelligence. We consider that there are in the insurance sector is already highly regulated, and therefore has certain specificities that make the regulation of artificial intelligence in insurance more practical and more desirable if this was done at a sectorial level rather at a cross-sectorial level. This doesn't mean that EIOPA doesn't see risk linked to AI, as we have discussed in the earlier. There are certain risks. We do see that we do believe that there's already regulation addressing some risk, but this also doesn't matter that we could eventually, after the AI negotiations have finalized, we could see the need to provide further guidance on how existing regulation applies specifically in an AI context to address the specific risk raised by this technology.
Excellent. Thank you, Julian. We're turning westwards now. We're turning to the US. Commissioner Perrin, in earlier conversations that we had in light of this paper, you highlighted that the NAIC launched the model bulletin over summer. This is an approach that builds on the existing regulatory framework. In the meantime, the bulletin has been published. So could you elaborate on the NAIC's approach on regulating the use of AI by insurers and the reactions from the industry as well as states on sort of the bulletin so far and on the process and sort of, the outcomes?
Sure, absolutely. I'm happy to do so. So U.S. insurance regulators working through the NAIC have adopted a measured and a principles-based approach, balancing support for innovation with the need for responsible development and deployment and consumer protection. You saw that in the issuance of the NAIC's high-level principles for AI use in 2020. And then our next step has been the development of what I will call more specific guidance to set regulatory expectations regarding the use of AI systems to perform regulated activities. So, as Mike and Julian discussed, there are, and as you have discussed at the Geneva Association, there are extensive laws in place. Carriers have to meet standards regardless of the methodology that they are using to engage in those activities. But recognizing some of the challenges and the risks associated with these methods that we talked about, the scope of issues, the speed of issues, we do, as U.S. regulators, expect carriers to adopt controls and procedures to mitigate those risks. And as I mentioned earlier, specifically with regard to governance, risk management protocols, and processes that incorporate certain considerations that we've identified in the model, with the overarching expectation that those controls and processes are going to align with the degree of consumer harm. So the rigor of the controls align with the degree of risk that a consumer can be harmed. Our approach in this document is principles-based. The bulletin does not dictate a specific content or specific standards, and it doesn't extend beyond the interpretive application of existing laws to AI methods. It does advise companies of what regulators will expect to see during an investigation or examination. So it gives fair warning that while we're suggesting that you do these things that you have a written program and that it covers these topics, understand that we will be asking questions around these topics when we are in an investigative or examination phase. Our intent was to expose a draft of the bulletin for public comment over the summer, and we did that. We did receive feedback during the summer national meeting in August in Seattle, and we received additional feedback that came in early September. We considered that feedback, we made edits, we then issued a second version for public comment on October 13th. Final comments for that version, I'll just remind everybody that's interested, are due on November 6th. And we will then be taking those comments, we'll take verbal comments during a virtual public meeting that has been scheduled for November 16th. I expect that we will then rapidly evaluate and consider those comments. We'll decide whether or not there should be changes to the current exposure draft. And I am cautiously optimistic that we will be moving forward with the adoption of a final version of the model bulletin during the H committee meeting in Orlando. And I would also be remiss if I didn't say and give a particular thank you to Singapore and to IOPA, because in the course of working through our work, in addition to looking at sort of NIST, I read pretty much everything that Singapore published, and many of the early papers, from IOPA. So it was very, very helpful to be able to understand the approaches that you have taken, because I do think consistency, to the extent that it's appropriate, is important. So I just wanted to give that little shout out because your materials were very helpful to us.
Excellent. Thank you, Commissioner. Christopher, turning to the industry now. As we've heard, many jurisdictions are trying to get their arms around AI. Well, some jurisdictions are following an innovation-friendly approach. There are other jurisdictions that are considering implementing a more specific AI regulatory approach. Your company is headquartered in Canada. So I'm curious to learn more about the situation in Canada and other markets where you are active. And from what sectors or players do you think AI risks in the insurance business are going to emerge?
Sure. So I think the Canadian experience, I guess, at this point is that there is a recently published voluntary code of conduct for the use of generative AI from our federal government. But that same government has also indicated that AI-specific regulation is likely to be in force anytime before 2025. So it's, and obviously that's subject to change due to political will or political, government changes, what have you. But I think the reality is they're taking a fairly slow and prudent approach, and hoping that people will voluntarily buy into the principles. That said, the principles are not fundamentally different from what's already been out there from Singapore and other jurisdictions. So it's I think that's where they are specifically on Gen AI and AI generally, but what we do have is a fairly robust privacy and data governance laws, both federally and provincially. So we have sort of a federal minimum, and each individual province can set their own rules above that. They don't specifically deal with AI, but as we've already mentioned, they have indirect application, and they cover a lot of the important issues. But what I really think is the more interesting part of the question is, where's the risk going to come from? And logically speaking, I don't think that large regulated financial institutions are going to be the ones that create sort of the generative AI monster. I think we have a series of checks and balances because we've been regulated. We've been we have supervisory authorities that we have strong relationships with. We also understand that if you make a small error, let's say in underwriting, and I think, Dennis, you alluded to this, if the AI can also turn on us in the sense that if there's something that happens and we don't understand why, and suddenly the reality doesn't match, let's say, the underwriting model because of an AI error, it can have a very fundamental impact on a line of business or on a product's profitability. So I think certainly for us, I don't think we're going to be the source of sort of something really harmful. But I do think the broader industry risk comes from the smaller, less regulated players. I think at this point, anyone in society can get open source or near open source Gen AI tools. The major foundational players, are not charging a lot for access, so there's a fairly low barrier for entry. And a small startup or smaller startup, if you look at it, the maximum risk they incur for their effort is their company goes under and folds. And the upside is obviously substantial if they disrupt an industry. So that asymmetry is really creating an environment, I think, where the Gen AI risk is going to come out of these pockets of smaller players. And you've already started to see where that's crept into like non-insurance industries. like voice cloning, now subject to potential focus and regulation. Deep fake imagery or name, image, likeness replication through AI. These have all basically attracted attention from regulators, and are really, I think, things that came out. This is not coming out of large institutional players. So I think that's where the risk is coming from.
That's very helpful, and I think the point you said that the risk is likely to come from the smaller unregulated companies, and you also mentioned that the Canadian government is contemplating or considering having AI specific regulation out by 2025. Are we looking at a cross-sectoral sort of EU-like horizontal regulation, or is there another approach taken?
No, I think it was more the opposite of that, is that they would not bring it forward before 2025, not that they are contemplating it and it will be in place. I think it's more of a, we're going to see where this goes. But I would not propose to speak for the Canadian federal government.
Thank you, Christopher. Very helpful. Let us now turn to our next theme, which is really balancing innovation and consumer protection, one of the core themes of the paper. Now, while supervisory mandates vary from being purely focused on financial stability and consumer protection to also include market development, in many markets, insurance regulators and supervisors have the challenging task in balancing the creation of an innovation-prone environment while ensuring maximum customer protection. This is, I think, a question for you, Mike, and for Julian, really on sort of, is the task of balancing innovation and consumer protection indeed as challenging as it sounds? Have there been concrete examples of situations where you had to choose between allowing for innovation or protecting the customer or the consumer? Maybe it would be helpful if you could give us some insights into sort of the thought process going on within sort of supervisory regulatory bodies when it comes to sort of decisions and approaches to new technologies such as AI. Maybe starting with Mike.
Thanks, Julian. Well, I think fortunately such a challenge, we haven't really seen it in Singapore. But I guess the thought process is really that the regulation definitely have to be proportionate to the materiality of the risk. And another principle is that regulation should not front-run innovation. I think as regulators, we have a certain protective instinct. Whenever there's a new risk arising, I think it's quite natural for regulators to think about how can we quickly plug this risk and so on. But at the same time, I think we are keenly aware that innovations can bring benefits. And therefore, we think that we should monitor very closely, but at the same time, stand ready to intervene promptly and accurately. I think one of the risk of intervening too early with too much force is that it may also distract us from the real concern in the longer run. Thank you.
Thank you, Mike. I think this intervening not too early and sort of not to front run innovation, I think is an interesting point there. Julian, turning to you, how do you see this and how are you dealing with this question within IOPA?
Yes, thank you, Dennis. And yes, I think so. Here, when we talk about IOPA, we have to make a slight difference between what IOPA is doing as an institution and also, on the other hand, what the EU Commission and the EU legislators, the European Parliament, the Council are doing in Brussels. But specifically when it comes to IOPA, we have adopted a prudent and proportionate approach. I think this work that Mike used, I think it's key, a risk-balanced approach to innovation, to make sure that the industry and consumers can benefit from the benefits of innovation, but also we cannot lose sight of the risks that they entail. This happens with any new innovation, and specifically when it comes to artificial intelligence and machine learning, IOPA has approached it in a prudent basis, trying to first understand how the technology was being used and what were the benefits and risks of this technology. For this purpose, in 2018, 2019, we published this big data analytics thematic review in motor and health insurance, where we did a market survey to analyze this kind of topics, including specific use cases in insurance. Secondly, and as a result of this analysis, we identified a number of opportunities and risks, and not all of these risks were addressed, or it was possible to address them from a purely legal perspective. So EIOPA created this an expert group on digital ethics in insurance, which developed the AI governance principles report, which is mentioned in the Geneva Association study, which I believe it was produced a very good outcome. We were very happy to count in this stakeholder group with very qualified people from both from the industry, academia, and also from consumer associations, and where we had very good and very good discussions within this group, and we managed to more or less create a consensus between all of them. And the report, the outcome that this report, I think it provides a good non-binding guidance to the use of artificial intelligence, specifically on an insurance context. Then we see this in other regulations. So these high-level principles, subsequently, a lot of jurisdictions, or some jurisdictions, they are following up with more detailed guidance. I think at the EIOPA, we might want to do this at a later stage, but this is being done already from a cross-sectoral perspective at European level with the AI Act. So we will leverage on this AI Act, and yes, try to see also specifically for those use cases that are not covered by the AI Act, if we also using based on the existing insurance legislation, if we can also develop some further guidance. This will be after the AI Act is approved.
Thank you, Julian. That's great. To turn to Commissioner Bahrain. So we at the Geneva Association believe that overall AI will contribute to financial inclusion and not exclusion. How will regulators and supervisors contribute in this area, and also sort of against sort of the backdrop of existing or emerging national financial inclusion strategies and policies at governmental level?
Yeah, so you know, I don't want to be tongue-in-cheek about this, but sometimes I think that our greatest contribution is frankly just stepping back and allowing innovation to occur. So of course we have to work at assuring responsible development, but we have to guard against micromanagement, right? So I'm an insurance regulator. I am not a data scientist, and I am not a mathematician, and I have no expertise in applied mathematics or any of those areas. What I want to do is make sure that we have the right guardrails in place, and that we have the ability to assess ultimately outcomes. But what I don't want to do is tell insurers and tell data scientists how to do what it is that they do. I guess if I think about how we improve inclusion and inclusivity in the ability of AI to me, it's fundamentally about understanding what it is that people want and need, and distributing it in ways that make insurance more accessible and right pricing certain products. So if you look at, for example, life insurance in the United States, there are whole groups of people that don't see a value proposition in life insurance, or they only see life-like products, so as, for example, burial insurance, as something that's beneficial. There is tremendous growth happening in that arena, with looking at products that are more nimble, more adaptable, where folks are able to have their product move through their life cycles, and they can toggle the amounts of coverage and where coverage depending on life events like your graduation from school, your marriage, children coming into your family. So those kinds of creative applications exist because they're fired by AI techniques, AI knowledge, and tools that are developed. Even simple things about which are a little scary for regulators, but thinking about where can people buy insurance. So, if people do most of their shopping at a bodega, isn't there an interesting approach to your ability to learn about insurance there and then use an app in order to buy certain simple products? So, we see that happening. There are a number of states that are considering those kinds of more unique, I won't call them true distribution channels, because ultimately it's coming through an app. But I think that's where the excitement is, right? The excitement is really all about understanding what it is that people who don't have a lot of uptake are really looking for. Need health equity is another great area. The NAIC's Special Committee on Race and Insurance, the health work stream, has really looked deeply into what are the practical barriers for uptake. And a lot of those barriers have to do with what's the value proposition for me? What is the real formulary? What is the real network look like? And those are all areas where AI plays a particular role with regard to insurance. So, you can look through claims and see this is the zip code where there is a high claims volume for this type of disease. Why is that? Oh, well, there's a food desert. Oh, there's no telehealth option because there's no broadband. And then you can target those areas so that people see value in the insurance and they don't drop it. So I could go on, but I won't. And because there are lots and lots of opportunities here.
Excellent. Thank you, Commissioner. And I really kind of sort of like the point on financial inclusion, new forms of distribution, and actually new ways of actually understanding customers' needs and therefore reach customers that we couldn't reach before. Christopher, turning to you, as an internationally active insurer that is known for being innovative, what is your experience with drawing a balance between allowing for innovation and protecting consumers? What has worked well in your view and based on your interactions, and what would you like to see different?
Well, I think, I don't see them as opposing innovation and protecting consumers as being things that necessarily you need to be mindful of them, but they're not necessarily opposing forces. I think our experience with that has been, we set that balance because we have a very clear, transparent set of intact values and an intact purpose. We're open about what that is on our website. We tell our customers, what that is, and then we use those, corporate values to inform how we innovate, and always the customer is at the center of that innovation, because we have to deliver on those values and our customer promise. So when we get a new project, I mentioned the multidisciplinary team that comes together and kind of figures out the data and data ethics and now generative AI elements of it. What you're really doing is, while you're identifying business needs, regulatory needs, licensing needs, what you're really doing is you're figuring out customer impact in that context. And the customer as almost as more than the regulatory regime, although obviously respecting the regulatory regime, those are the things that are front and center. Because if it may work from a regulatory perspective, but isn't right for the customer, then it's probably not going to proceed forward. So I think if you want to be innovative, the person, as an insurer, the person that needs to be at the center of your decision making is your customer. They have to have real tangible benefit from what you're doing. That doesn't mean everyone will have an equal benefit, but it means that, usually what you're doing is you're finding the sources of risk and pricing them appropriately in order to enable other people who aren't the source of that risk to benefit from more accessibility or better pricing. What I also think works really well is the multidisciplinary approach. We have a data science lab, we have a risk team, we have a compliance team, we have my team, which does commercial legal work to support the supplier populations. By having everyone together, what you really figure out is that you set the balance at the beginning, if we can even call it a balance, but you set your priorities at the beginning. And then by the time you get through the investment phase in those projects, what you're doing is you're delivering on a benefit to the consumers, as well as doing something innovative, rather than the other way around, where you do the innovative thing and then try to shoehorn it into a customer benefit or try to shoehorn it within a regulatory framework. So I think we're doing it the right way, but that's predominantly because that's our culture and our values. What would be lovely is if we had some, we do this our way. But I think for other insurers, whether it's globally or regionally, I think certainly it would be helpful to give them some principles-based guidance about the kind of factors that regulators expect to be considered when deploying like Gen AI and next gen technologies. They don't have to be technology specific. They could be, they're actually better if they're not. But I think that would raise the tide for all boats in this context. It would allow smaller players who maybe aren't as sophisticated or don't have the benefit of scale that we have to still participate in the space by knowing how to do it the right way, as opposed to just doing it. And I think that's the important thing, is if we can get everyone to sort of apply similar discipline to these kind of emerging technologies, I think it's not a balancing act. It's innovation will drive consumer benefit.
Thank you, Christopher. Now I realize we have reached the end of the allotted time for the webinar today, but I just wanted to turn to one or two audience questions here, if I may. So I see that we have a question. We were talking a lot about governance and governance structures when it comes to sort of managing risks of AI. And there's one question here: do the panelists see the need for insurers to appoint a specific function for AI, such as appointing a chief AI officer or chief data officer or chief tech officer, and the extent to which that would strengthen the accountability of any AI issues that may arise? So Christopher, I think this will be a nice one for you, or anyone else who wants to step in. Of course, feel free to step in.
Please feel free to interrupt me, guys. But I think what I would say is there's two elements to it. You do need some function if you're going to be doing data science that is specific to data science and understands how data science works. So we have that. We have a whole organization that is really oriented around doing that in a structured and professional way. I think the other element, though, is as generative AI in particular becomes more widely accessible to everybody, I think it has to be something that is dealt with on an organization-wide basis, because you're going to have people who are, whether it's brokers, whether it's distribution, whether it's marketing, they're going to have access to these tools. And I don't think you can isolate a single person who's going to be accountable for that function. I think your risk team has to know about it. Your compliance team has to know about it. Your existing structures all have to be aware. And I don't think that's new. I mean, every time new regulation or new innovations come out, those teams have to get up to speed and help. But I think it's a long answer to say, if you're doing sort of pure data science, you really do need experts. You need proper data scientists doing that work with proper oversight and documentation, because that's going to be critical down the line to prove that you did it the right way. But for the organization, I think it has to be embedded in multiple facets of the business, and those functions already exist.
Thank you, Christopher. Any reactions to this, or any other views maybe to this point? All right. I think that was an interesting discussion. I just would like to thank you all very much for your time today and for your great input and this great conversation on our AI paper and all the issues that come with the use of artificial intelligence in insurance. And as this field is evolving so extremely quickly, I think this will certainly not be the last discussion on this very important topic. So I'm sure more is to come there. So for now, I would like to thank you all, and I would like to thank our participants for joining us and for connecting to the webinar. And I would certainly encourage everyone to look at our paper and or the 4-page summary that we have provided for you on the website. So thank you all, and have a good day. Thank you very much. Bye-bye.